Over the past 24 hours, news related to the U.S. economy and businesses has been dominated by the ongoing effects of new tariffs and recent weak economic data. Here is a summary of the key developments.
Economic and market overview. Weak economic data. A weaker than expected report on activity in the U.S. services sector has added to concerns about the health of the economy. This follows a disappointing jobs report from last week. Stock market performance. U.S. stock indexes have slipped in response to these discouraging economic signals. However, losses were partially offset by hopes of a potential Federal Reserve interest rate cut and some strong corporate earnings reports. Federal Reserve and interest rates. Following the weak jobs report, market expectations for a September interest rate cut by the Federal Reserve have grown significantly. Lower rates could stimulate the economy, but also carry the risk of fueling inflation. Inflation. The Fed's preferred inflation measure, the Personal Consumption Expenditures (PCE) price index, showed that prices ticked higher in June, a development that complicates the central bank's decision-making process regarding rate cuts.
Impact on businesses large and small. Tariffs. The latest round of tariffs, particularly those on goods from Canada, are a major source of concern for businesses. Small businesses. Small business owners are particularly worried about the devastating impact of these tariffs, as they operate on narrow margins and lack the resources to absorb the increased costs. Some are pushing for exemptions. Large businesses. Companies like Edgewell Personal Care, Schick and Playtex, and Diageo, Guinness, have reported that tariffs are a drag on their profits. Other companies such as Apple and Walmart have previously warned that tariffs are raising their costs. Labor market. The recent jobs report, which showed a sharp slowdown in hiring and downward revisions to previous months' data, indicates a weakening labor market. While this may ease labor shortages for some small businesses, it also points to a broader economic slowdown. Corporate earnings and AI. Despite the economic headwinds, some companies are reporting strong earnings, particularly those in the artificial intelligence (AI) sector.
Factoring can meet the cash needs of businesses which do not qualify for traditional financing, but have good quality accounts receivable outstanding. Contact Chris Lehnes at Verscent Funding to learn if your client is a factoring fit.
You can reach Chris at 203-664-1535 or the email address chris@chrislinus.com.
Factoring provides the working capital businesses need to thrive in an era of increasing tariffs. Contact Chris at Verscent Funding to learn if your client is a factoring fit.